Hi guys, in this video we will be seeing RTP of May 16. So we will be going through chapter wise questions. In dividends, a 100% state government owned company has been declaring dividends at 20% in past 3 years. Current year the company not earned profits, but it wants to declare 20% dividend from reserves. See, generally a company, if they don't have profits, they can declare dividend from reserves. But for a 100% government company, it is not possible. So in this case, the government company cannot declare dividend from reserves. So only if they have profit in the current year, they can declare dividend. They cannot declare dividend from reserves. Then second question, can a company declare dividend from reserves other than free reserves? Only from free reserves they can declare dividend. They cannot declare dividend other than free reserves. Then transferee got shares from transferor. So transferor sold the shares to transferee on November 30th. The transferee has filed the papers with the company on January 20th. The company declares dividend. So what will happen? Who will get it? See, the thing is, the company in the register, they don't have the transferee's name. So they still have the transferor's name. So there is a confusion. Hence, what happens when there is a dispute? This will be given kept in the unpaid dividend account. So in this case, you should write section 124 unpaid dividend account. It will be kept in the unpaid dividend account. So in 126 we will be studying something called abeyance. So 126 read with 124 you should write. So till the transferor have given a written consent that I have with my knowledge I have transferred my shares to transferee. So hereafter kindly pay the dividend to transferee. If they have said like that, then it's not a problem. Otherwise, it will be in the unpaid dividend account. Then books of accounts chapter. The company is incorporated in India and has 2 foreign subsidiaries. Explain the provision with respect to financial statements. See, when there is a subsidiary, either it may be Indian subsidiary or foreign subsidiary, you have to consolidate. So in this question, it's about consolidation of financial statements. Director of a holding company appoints an agent to inspect the books of subsidiary. Can he do so? The director of the holding company appoints an agent to inspect the books of subsidiary. In case if the director appoints agent and it is authorized by the board resolution, it is not a problem. In this question, it is silent on resolution from the board. So if it is not approved by the board resolution, then inspection by agent is not permitted. So director without even board resolution he can inspect, but if there is an agent, he should obtain the board resolution in his favor. Then company kept the books other than register office, failed to inform ROC, what is the penalty? See, when they want to keep the books other than register office, they should first pass board resolution. In this question, if it is assumed that board resolution has been passed, then there is not a problem on penalty. It is only the time delay of filing with ROC. So within 7 days they should file, or additionally 270 days they will be giving under section 403. So this question should be read with section 403. So if they have not passed the resolution, then penalty is there. 50,000 to 5 lakh penalty you will be putting. But if they pass the resolution, but only that complaints is not filed, so additional grace days of 270 days with additional fees they will be paying. Then next question, auditors. Audit firm consists of 2 partners. They are having 40 private company audits and 1 new private company with the paid up capital of 110 crores. So now this is amended area question. Private limited company will be excluded from counting that 20 audits if it's less than 100 crores paid up capital. In this question, it is 110 crores. And what about the 40 audits? The 40 audits already having 100 crores or more. So this one more audit will be creating a trouble. They will be disqualified under the ceiling limit. So 141 they will be disqualified because it's already crossed 20 each, which is 100 crores or more paid up capital. So in this question, they are not eligible to get the appointment of that one new private company because the existing 20 plus 20 into 2, it's already crossed that 100 crores. If they have not crossed, that is 100 crores or more is not there in the existing 40 companies, then it will be added. This new company will be accommodated. Otherwise, not possible. Then a company was incorporated on November 15. The relative of the auditor holds 1.10 lakhs face value. That is 1,10,000 rupees face value of the shares. On January 2015, the auditor got appointed. So, see, the auditor got appointed in the month of January 15. On December 15, the shareholder filed a complaint stating that shareholder, one of the relative of the shareholders holding the shares. So, generally, if a person is a relative of the auditor, they can hold shares in the company up to rupees 1 lakh face value. In this question, they are having more than 1 lakh face value, and there is a proviso in the section that within 60 days, if they can able to sell or bring it down to 1 lakh, no problem. But if it's already crossed 50 days, 60 days, then it's going to be a problem. The auditor is disqualified. So the contents of the shareholder is right. Then we are going to dividend section, dividend chapter. Company having paid up capital 10 crores, whether independent director is to be appointed. As per independent director section, there are 3 threshold limit. If it's a listed company, mandatory. If it's an unlisted public company, having paid up capital 10 crores or more, turnover 100 crores or more, loans, borrowing, deposit from public exceeding 50 crores, they have to appoint independent director. Hence, they have to appoint independent director. So if it's just a public company, at least 2 directors shall be independent out of the total. Then the second question, public company has only 2 crores, whether the independent director is necessary. If it is a listed company, yes. If it is a non-listed public company, then there is not necessary for appointing independent director. Whether KMP can be appointed as independent director? No, KMP is disqualified to be independent director. KMP, promoters, directors, relatives of them, then 2%, more than 2% shareholders are disqualified from appointing independent director. Appointed as independent director. Then the person together with his relative holds more than 3%. Independent director cannot be appointed as independent director. Next question, this is for small shareholders director. The listed company has 5,000 shareholders. It receives notice from 400 small shareholders for appointing SSD. See, for SSD appointment, it should be 1/10 or 1,000, whichever is less. In this question, 1/10 comes to 1/10 of 5,000 is equal to 500 or 1,000, whichever is less, so 500. But they have received notice only from 400. Hence, it is invalid. So the board may reject. The additional director failed to get regularized in the AGM. Can he claim? Can the board appoint him as additional director once again? The answer is under section 161(1). If any director failed to get regularized himself as additional director, they cannot be appointed one more time as an additional director. Then managerial personnel. MD resigns as a result of amalgamation. He got appointed in the amalgamated company. Can he claim compensation? No, they cannot claim compensation. Next, a whole-time director of a company with paid up capital 20 crores passed away. Explain the procedure to fill the casual vacancy. Casual vacancy of a whole-time director can be filled by board of directors within a period of 6 months. This is told under section 203. The whole-time director of a government company with paid up capital 20 crores passed away. Explain the casual vacancy. See, section 203 is not applicable to all the government companies. So, it is the board of directors' duty to fill the casual vacancy, but there is no time limit for filling. For normal company, 6 months time limit is there. Then, Salary paid to doctor in professional capacity, does it form part of managerial remuneration? No, because it is paid in the professional capacity, so it is not a remuneration. Hence, next meetings chapter. Foreign investors in the company holds 49% in an Indian company. Discuss the validity of shorter notice sent to the email. At least 7 days notice should be given for all the board meeting. If they are sending shorter notice, if the company has independent director, at least one independent director has to participate. Even if there is no independent director participating in the meeting, at least they should ratify the business. Next, quorum of Section 8 company. So what is the quorum of Section 8 company? 25% of the total number of directors or 8, whichever is less, subject to 2. So in this question, they have given 9 directors, out of which 2 seats are vacant. Now, out of 9 directors, if 2 seats are vacant, we should reduce the 2 from that 9. So 7 into 1/3 is equal to 2.33, it will come. So round off to the next digit. Should be always any fraction go to the next digit. So it is 3 directors in this question. So 3 or 2, whichever is higher, 3. So Section 8 company, what is the quorum? 25% of the total or 8, whichever is less, subject to 2. Then director of a private company holds face value 50,000 rupees in another private company, which has paid up capital 20 lakhs. Whether they need to disclose the interest. See, 50,000 rupees divided by 20 lakhs comes to around more than 2%, 2.5% it will come. Hence, if any director holds more than 2% in a company, they should disclose the interest. If yes, then assume the company has entered into a contract. In that contract, when the director is having interest, you should not participate in the contract. Then pass resolution for borrowings that you should pass under section 180. They have asked resolve that. So pursuant to section 180, you should write like that. Then inspection chapter. ROC send notice to ex-employees of the company. The ex-employee ignores because he already resigned from the company. So whether it is valid. See, as per section 206, ROC has a right to send notice to current employee as well as previous employee. So the previous employee has to attend the hearing of the ROC. So ex-employee's contention here is wrong. Then compromise. The exchange ratio fixed by a CA firm and a few shareholders contested it is wrong. This case is related to that employees of Hindustan Lever Limited. So the exchange ratio will not be questioned by the court. They will not interfere unless otherwise it is challenged by the shareholders and they prove that it is wrong. So the onus of proof is on the shareholder. The next part of the question, if central government contested that it is wrong, what will? For even central government, the same position only. Central government have to prove that the exchange ratio is wrong. There is a error in the exchange ratio. So if it's proved, then the court will be interfering. Otherwise, the court will not interfere. Then operation mismanagement. The board did not declare dividend. The member moved to CLB on grounds of operation mismanagement. See, declaration of dividend, it's absolute discretion of the directors. Non-declaration of dividend does not amount to operation. Next, winding up. Liquidator called the money from list B contributories. List B says that they are no more shareholders. Why they should pay like that? See, in contributory there are 2 types. List A contributory and list B contributory. List B contributory is like this. The past members who sold the shares to the present members in last 1 year and the present members become insolvent or untraceable, then the liquidator has a right to collect the money from the past members who became, means like who sold their shares in last 1 year. And so in this question, the list B contributories have to pay the money. Then list of the procedures for security, inspection, investigation in case of winding up cases. Scrutiny, inspection, investigation, winding up cases. See, whenever a company files a petition of winding up with court, the court will write a letter to OL, that is official liquidator, and they will also intimate the ROC. Then they have to do the scrutiny inspection, that is 206, 207 procedures as per Companies Act. They will be inspecting or scrutinizing the documents, books of accounts, history of the company, who is the promoter, who is the director, etc. And they will read the audit reports. And after that, after doing everything, you will be submitting a report to the court. After that, only the court will order for winding up. Only after getting the clean report, they will be doing the control, means like a complete survey from MCA. That MCA 21 portal is there, no? From there, they will take all your documents which you filed with the ROC. Then producer company wants to issue bonus shares. Explain the procedures. See, they can capitalize the general reserve by passing general meeting ordinary resolution. They can issue bonus shares. This is also called as patronage bonus. Then explain investment modes from general reserve. From the general reserve, they can invest in fixed deposits. They can invest in public finance institution, multi-state cooperative societies, etc. If they want to invest in producer company also, they can invest. If they want to invest in any other company, 30% of paid up capital and free reserve they can invest. Then by passing special resolution. Then explain provisions relating to board meeting of the producer company. See, the board meeting, first the quorum is 1/3 or 3, whichever is higher. It's not 2. Then they should give 7 days notice to the board meeting. Then 4 meetings in a year and 1 in each quarter. So these are the things should be kept in mind in regarding to board meeting. And sitting fees, as decided by the articles of association, they will be paying the sitting fees. Then foreign company incorporated abroad, 55% is controlled by Indian citizen and Indian body corporate. That company established share registration office in India, whether it is a foreign company. See, when 55% is controlled by Indian citizen and Indian body corporate, section 379 attracts. So it is Indian company for its Indian operation. But whether it is a foreign company or not, first we should see. The company established share registration office in India. So a company incorporated abroad and having place of business. Share registration office is a place of business in India. So it is a foreign company. But since control is in India, so the entire act becomes applicable. So as per section 379, this entire act is applicable to this foreign company. Then DIN procedures. So how to obtain DIN? DIR 3 form has to be filed along with the declaration DIR 4. Address proof, ID proof, photograph have to be submitted along with which is verified by CA or CS. So this you have to submit to the government, and RDJD Noida will be approving, having the authority to approve your DIN. Explain the provision relating to cognizance of funds. As per section 439, the court will take cognizance of funds if it is complained by shareholder, ROC, central government, SEBI. This is the 4 people can complain. But if central government or ROC complains, they need not even come to the hearing. So it is run by the company prosecutor. All the offence except this 447 fraud offence is bailable offence. So it is called as non-cognizable offence. Then we are going to allied laws. So they are asking about manipulative device, manipulative and deceptive devices. So the device which is used to defraud the investor is called manipulative and deceptive device. So anybody who is using that, they will be suspending from the trading. Then insider trading. Insider trading is nothing but using unpublished price sensitive information, purchase and sales of security. So they will be putting penalty of 25 crores to 3 times of the profit book. Then substantial acquisition. So there is separate rules for substantial acquisition. So if any person buying more than specified percentage of another company without informing stock exchange, actually no, any company having more than 25% in one company, for every additional 5% they have to inform and give public notice when they are acquiring. Otherwise they will be comes under the substantial acquisition thing. Then price determination under SEBI. So for price determination, This face value is there. More than or equal to 500 rupees, face value is 10. Less than 500 rupees, face value is like more than or equal to 500 rupees of issue price. The face value can be 10 or less, but at least 1 rupee. For others, that is less than 500 rupees, it should be mandatory 10 or above. Then price, floor price and price band. Floor price is minimum price and price band is the maximum price. So floor price, the maximum price, so floor price is equal to or more than face value, and the price band is maximum to 120% of the floor. Then SCRA, central government has given condition to, what are the conditions central government will be giving while granting the recommendation, means recognition of the stock exchange. Central government will give additional conditions, or through SEBI they will give qualifications of members of stock exchange. So regarding the qualification they will give. Then manner of transacting, and books of how to maintain the books of accounts, how to get it audited. So these kind of additional things, when they are giving license, they will be giving additional things. Then commodity derivatives. So there are two types. One is transferable commodity derivative, another one is non-transferable specific commodity derivative. So this SCRA Act is not applicable to non-transferable specific derivatives, commodity derivatives. But see, central government may tell what is the area where you can transact this commodity derivative only through a member. So that is section 13. So you are transacting in an area other than through a member of a stock exchange, that transaction will become illegal. So anybody who is assisting in transacting with non-transferable specific commodity derivative, they will be penalized. And central government, if they think fit in any specific area, they may apply the SCRA to a commodity derivative. Okay. Then FEMA, British harvesters stayed in India for a period of more than 180 days while discharging a duty. See, a person who goes abroad during the harvesters travel and all, and who expected to return in very future, like very near future, like 1 or 2 days, 3 days, like that, they are not counted as non-resident, even though they stayed more than 180 days in abroad. Same way, when an abroad citizen comes and stays in India while discharging their duty, but they are based out of abroad only, say this harvester is a specific case. So this harvester, British harvester, will be British citizen only. She will not be a resident. She is a non-resident only, even though she stayed in India for more than 180 days. Then film star withdraw 20,000 US dollars for Diwali show in which is happened to be in New York. What is the permission? From where permission to be obtained? See, the permission should be obtained for a cultural tour from central government. The person wants to draw foreign exchange from for the heart surgery, which should be done in Singapore. How much they can draw? For medicals and all, a person can draw 2,50,000 US dollars. Then a person wants to study in US and want to draw 20,000 rupees for studies and 30,000 rupees for stay expenses. They can draw up to 2,50,000 rupees, 2,50,000 US dollars per annum without getting RBI permission. Beyond that, they have to get RBI permission. Then Competition Act, various situation which leads to abuse of dominant position. See, if you have control over the market, there are market structure. So then availability of raw materials, advantage over the competitors, then economic power. So this and all leads to dominant position. And if you are fixing a predatory pricing, and if you are creating a barrier to the new entrant to compete with you, or you are closing the competition, this is abusing the dominant position. Then combination limit. What is the limit of combination, which is revised very recently? So you should study that combination limit. So the latest limit of combination is this: individuals in two individual company merging in India, assets 2,000 crores, having turnover 6,000 crores, any one condition, or two group companies in India getting merged, assets 8,000 crores, turnover 24,000 crores. or two company, one in India and one in foreign, together merging. So the global assets worth 1,000 million US dollars, and out of which 1,000 crores is in India, and global turnover is 3,000 million US dollars and 3,000 crores in India. And if two group companies getting merged, 4 billion US dollars and 1,000 crores in India, or 12 billion turnover, and out of that 3,000 crores in India. And group means one company is exercising more than 50% on another company. So holding subsidiary relationship is the group. Next, other acts. Company wants to start insurance business with capital of 99 crores. See, life insurance business 100 crores is required. Health insurance business specifically 100 crores is required. And reinsurance business 200 crores is required, and net owned funds 5,000 crores. So with 99 crores, we cannot start an insurance company. Then registration of Sarfasi Act, Sarfasi company got cancelled. Where to appeal? See, the Sarfasi company has to appeal to Ministry of Finance, that is central government, that is Ministry of Finance, they have to appeal. Then a person arrested under PMLA, he wants bail. See, a person if he is arrested under PMLA, it's a non-bailable offence. They cannot be given bail. But if the public prosecutor has approved it, or he has not expressed his unwillingness, 3 persons can be given bail. One is woman, another one is juvenile, another one is sick person. They can be given bail. Other than that, nobody can be given bail. Then what is the exceptional construction? This and, or, may, must, shall. So this is exceptional construction. So you should write when. And means two conditions should be satisfied, or means any one clause should be satisfied. Then may, must. So may means discretion, must means mandatory, shall, that is mandatory. When discretion becomes mandatory, so when mandatory becomes discretionary. This and all to be written. So with this we have completed the May 16 article. All the best. So you can like this video if you like it, and you please subscribe for the YouTube channel. Okay, so that you will be getting more videos whenever I am releasing.